Okay, hi everyone. Welcome to today's live analysis session. Today we will be going through the S&P 500. My name is Sherman, and together with Vantage, we bring you guys this series every Wednesday. Before we begin, a quick disclaimer for everyone. You're just pulling up the chat. Okay, trading any forms of derivatives carries significant risk. Do ensure you fully understand the risk before making any trading decisions. Always start off your own demo account first before moving on to your live accounts. Okay, if you have any questions along the way, feel free to put it in the chat. Today is a live analysis session. If we do have time, we can revisit some of the analysis that we've done last week. Otherwise, we are just focused on S&P 500. For this week and the upcoming trading session. Okay, so as always, we are using the TradingView tool. This is available on the desktop, mobile, and as well as on the web browser. So we will be looking at S&P 500. If you're trading the S&P 500, you will want to be looking at this index cash CFD that's offered by Vantage. There are variants of how you can trade the S&P, but if you are trading through Vantage, this is the one that you'll be looking at. Okay, so as always, we always start off with the higher time frame analysis. This is the first time this month that we are doing S&P 500, but the analysis is no different whether at the start of the month or at this point in time. The indicator that we're using is the Wayne's pivot. So if you click on your indicators at the top, you will be able to search for Wayne's pivot, right? And once you've added in, let's start off with the higher time frame. Okay, so you usually start off from the daily. So when you're on the daily candlestick, you will see that it is automatically set as the monthly pivot. Okay, quick rundown on what the pivot points are. Okay, the pivot point, which is the center line marked in yellow here, is the average of last month's high, low, and close. And with that pivot point, you can plot out R2 and S2, which is the range that we saw last month from the high to the low, right? That range that we saw last month, it's basically the distance from that pivot point to S2 and R2. Okay, R1 and S1, they are basically from that pivot point. R1 is from the low to the pivot point, the same distance that we saw from that low to the pivot point. It will be represented from the pivot point to R1 as well. And same from the distance between pivot and S1. It's from last month's high to the pivot, and we see that same distance to S1. So essentially what we want to be looking at is to define a trend. And once we have defined a trend, if we are in an uptrend, we are looking to buy in this area here, just below the pivot point to M2. And our target is M4R2 right at the top here. And if we are in a down, a bearish trend, then we're looking to sell M3 and we are targeting M1S2. Okay, M3 pivot, M3 is just the area just above the pivot. So that is where we are trying to sell and our target is M1S2. Okay, how we define a trend, we usually look at whether when was the last time price actually break above R2 or below S2 and closes above or below it, right? So the closest that we can see, the most obvious one is in November, where prices close above R2. That gives us that first sign that price is going to be in a bullish trend for S&P 500. Another occasion where we saw this was in February, where it closed just above R2, but this was not a clear-cut close above, so we wouldn't consider this as a support. But nonetheless, we see price actually move to the upside, hitting the targets for 3 consecutive months. Okay, in May, we hit the M4R2 region. Same thing for June and July. Okay, so the plan for August this month was to buy M2, and our target was here. Okay, so this was where we wanted to enter. Okay, and our target was this area here. But because of that Black Monday that we saw on we considered that the 1st of August, right? That was where we were supposed to buy, and then we got pushed to the downside, and instead of achieving this target here, we broke below S2, and then just as soon as we got, this was the Black Monday, right? 5th of August to the low here. Okay, but as soon as we got to the end of the week, we have already recovered above the Monday, and thereafter the week since the 12th of August, we are in this upward movement. Okay, so this will still be the key area where we're looking to buy, and the rationale is that this was where buyers decided to push above. Okay, and then they got stopped out on the 1st of August, this candlestick here. Again, each candle represents the daily time frame. And once we have this candle, let me just mark it here, okay? This candle was where the buyers entered, right? At the best price, which was at the bottom of this blue candle. And then on the 2nd of August, this was where the buyers got stopped out. Okay, so in essentially what we are trying to show here is that this entire area here should be void of buyers because they bought at this price and they said through 1 week of drawdown, or they were stopped out due to this move here on the 2nd of August, right? But now that prices have broken above this area, right, this is considered a lucrative position to take a buy again. So essentially what we're looking for is a dip to the pivot and then back up to the target, which was essentially the August target for a buy. Okay. Any sellers who sold here and did not manage to either get out or take profit at this low here, okay, they did not get a second chance, right, to take profit. So if you were a seller here, you wouldn't know this was the take profit for most of the market. And so if you held on to the position hoping for a move to the downside, right, you would have been you would not be able to take profit at the best price here. And instead, if you look at the price action for the following 5 days following this, again, this last down candle was on the Monday, and by the end of the week, we are above any sellers who came in on that Monday, right? So this area here probably signifies any sellers who decided to target this low here, trailed the stop loss, was not able to get that push down to this area again. And what happened was that their trail stops were being triggered, and 13th of August, which was last Tuesday, was the time where you see these trail stops all being triggered. Okay, so for buyers to have a strong entry again, you wouldn't want to enter here because this is another group of sellers being there'll be two entries for us as buyers. Okay, this gap here would be where we'll be very interested in because this is where the sellers were being stopped out in a trigger of the stop losses. Here again, another set of sellers who were holding on to these positions, but again were pushed out of the market. And by the end of the week, last week, any sellers who got in were either at break even or were already been stopped out by the trail stops. Okay, so these are the two key areas. If we are looking to buy, if you can get a dip into this area, this will be our first consideration. And then our second consideration will be this area here. Okay, so any movement again from here, any retracement from this high, that will be considered a new group of buyers coming in, right? The previous bullish candles that we saw here were probably caused by trail stops of sellers. So the first bunch of buyers that come in from a retracement, again, this will be a fresh bunch of buyers, okay? And our target would be R2 and 4. Okay. So using the pivot points, how do we know if we are bullish? If we get back down to S1, right? This is a really good price to buy, but again, this would be way too low for additional buyers, right? Buyers, if this is a bullish market and based on fundamentals, we are looking to buy, this would probably be the best price. And what will be the catalyst for this movement, right? The catalyst for this movement will be the FOMC minutes that's going to happen in about 6 more hours, right? FOMC minutes will be the first, will be on the 3rd week on Wednesday, right? Prior to the month where the Fed will adjust the interest rates. So the next interest rates adjustment will be done on the 18th of September. Right, so this will give us a hint on whether or not rates will remain the same or it will be reduced. Right, so the likelihood of it going down now, I think is 72% or in the high 70s, right? So when the Federal Reserve is, the expectation is that interest rates will be reduced, right? We will see the S&P 500 being a little bit more bullish. Of course, there are studies that shows that whenever there's prolonged high interest rates and then interest rates are cut, there'll be a pending recession. Again, that's historical data, but the fundamentals or the likelihood of the S&P 500 taking a short-term bullish stance, it's higher when the Federal Reserve reduce their interest rates right at the start. Okay, so this is kind of like the monthly plan. Where are we targeting? We'll be targeting this all-time high again, which is R1. But essentially what we're looking for, the initial idea would be R2 and 4. Okay, same thing, R2 and 4, if we were to remove all of these arrows, you will see that this is the channel that we're looking at. initially. Okay. This is the channel that we're looking at. Our next area to sell was this area here. So this was the best area to sell, right? Sellers had to reinforce where they started the sells, but instead of getting a rejection of this zone, we got a trigger of stop losses, right? A break above this area here. And clearly the gap between these two areas here, if we go down to that low time frame, okay, this was the gap that we're looking for. We were looking for a rejection of this area, so we did not get that. And basically, it was yesterday's, no, last Thursday's, that trigger where we are looking for the move to the downside. We got this trigger and then retracement before we move up higher. So no doubt we are looking to use this as a quick short-term support based on today's FOMC minutes. We may or may not see the retracement back down into this area, but the likelihood is that we are going at least to this previous high first, and then to the target in which we were expecting at the start of the month. Okay, so what is the alternative? The alternative right now. So we have seen two groups of sellers that were stopped out. In fact, three groups. So this last group here, right? By the end of the week, they were all either in a drawdown or they were stopped out. These were the late sellers, right? But they were the one that caused the greatest move to the downside. So they were the ones who sold at the most discounted price. And by the end of the week, they were all either stopped out or they were all in a drawdown. So this is the first group of, let's use the body of this daily candle. This is the first group of sellers that got stopped out, second group of sellers, and third group of sellers. Okay, so whenever price enters into this area, we can be certain that either existing sellers who were not stopped out, so they are still holding on to their positions as a sell, and they have been holding on for 2 weeks, this position for 2 weeks in a drawdown, they want to get out. And when these sellers get out of the market, you'll see that first bounce. So whenever, if you're a seller from here or you're a seller from here, if you're selling and price gets back into this area and you have been holding for 5 days, right? The likelihood is that you get out of this position and reevaluate your position, right? You do not want to take on that risk for an additional few more weeks, right? So by removing that position, by taking that position out, that sell position, you're actually buying in the market, right? So you will, if you are a seller in these areas here, you will be contributing to the upward move by buying in the market because you're looking for a buyer at this area, right? And you want to sell and get out of that position. So by doing that, you will be buying and you will cause, or the majority of the sellers who were in a drawdown will cause the price to move to the upside. Okay, same thing if this fails and it gets back down into this area, because of that history there, right? there will not be additional sellers adding on to their positions when it gets down into these areas here, because these areas are considered too cheap to sell already, because you have a chance to sell now, you're not selling. Why wait till it gets into these areas before you're selling? So the higher probability moves will be sellers will get out of their positions, and in turn buyers will be looking to buy at these positions because this area will be void of sellers. Okay, again, for prices to get past these areas, we need sellers in these areas, and these sellers are the risk takers because these are discounted prices for sellers to sell. Okay, so we are moving up in this direction. If you're following this channel closely, right, by the tip of this, which was again the start of the month, we would have bought at M2, right, by following this ascending channel. Okay, and you have been stopped out usually the price action that we are expecting. Oh shit. Okay. Okay, we are expecting a price action of this. Okay, let's draw this out here a little bit. Okay, most of the time we are looking at something like this. Let's just zoom in a little bit more. Okay, on the daily again, we are expecting this sellers to hold, and we are aiming for the downside. Okay, if these sellers are being stopped out or in a drawdown right now, then this will be invalidated. Okay. So expectation is this, either to the upside here, or just straight move to the upside. Okay. But if you're playing a long-term game, you will see that the top of the ascending channel is probably where we want to target. But that is not something that we can achieve in this month. Okay, by getting price up to this area, your pivot would have shifted probably to this high, and the plan for the month of September, okay, if prices end up here and closing at this high here, your pivot for next month would already shifted up here. Again, pivot is the average of the high, low, and close. So we probably got the low of the month already, which is here. We are now pending the high and the close. So with this move to the upside to R2M4, we can expect pivot to shift to at least this high here. And that is where we would wait for the retracement to the high, the previous high. Okay, and then we will be targeting the upside of this ascending channel. Okay. So a few fundamentals to take note of. We have FOMC next month, which the expectation of the interest rates to close at 25 basis point is about 70%. Later we'll go onto the website and check what's that percentage. So fundamentals would be that interest rates of USD is going to go down, which means anything trading against the USD will appreciate. So gold, euro dollar, pound dollar, S&P, US 30, US your Nasdaq, all of this will appreciate. So that supports this move. The second thing that is based on fundamentals will be an election year, right? So during an election year, especially for equities, they tend to do better because of how the elections, I mean, historically during election years, the S&P 500 or the Nasdaq and the US 30 will do well. So two fundamental key reasons why we're expecting prices to go to the upside. Right, the politicians will want the stock market to be doing well so that the sentiments on the ground are good. They vote in the president that they think will bring about a better economy. And so usually there are a lot of things that goes behind the scenes to prop up the market during an election year. Okay. What would be, okay, in the rare case that we want to do a down or a bearish move, if you're bearish in this market, you're expecting a double top here. Okay, a double top here, it's possible, but first you will need to get rid of these three groups of buyers. So we will need sufficient evidence, or we need a few price action or candlestick movements to show that firstly, this high is going to be maintained, which is pretty hard. So whenever you see a move to the upside, okay, so I mean, this can be an example, but if this is the high to be taken out, right, if this is the target, prices will inch very closely to this, and then there'll be a slow descent, right? Okay, because a take profit level is not usually done in a concerted effort. What I mean by that is that there are people who are targeting this high, but there are people who have taken an open position, so they bought and they are letting their winners run, right? So for us to actually see this as a take profit zone, what we'll need to see is we need to see price creep up to this area. And once they hit this area, there'll be a first bunch of folks who will want to take profit. And when they take profit, right, there'll be people following. And if they see that price is descending at a accelerated rate, right, they will want to market sell the orders, right? But the true take profiters or the true winners who have entered below, right, they'll wait for price to retrace back again. And for the third time, okay, and in fact, if they can get a better price at that, they will sell. Okay. So for us to actually get from a buy position to a sell position, it has to tell us at least 3 times. Okay. The first time is the first people who took profit. Second group of people who saw people taking profit at this level here and wants to take their profits at the best price possible. This is the most premium price that we have seen the S&P 500 made for this CFD. So once we see a rejection of that area below that last bearish candle, we can confirm that these are profit takers. So first group of profit takers, second group of profit takers. Okay. So once we are clear that all of the buyers have now become sellers, right? When they close their buy positions, they do become sellers, right? For at least 2 times. The third time, if it does reject this level again, okay? If it does reject this level again, we can confirm that this is a bunch of new sellers. And what the new sellers need to do is they need to show that there is sufficient momentum past that last group of buyers. So for them to push the price down such that any buyers within these 2 highs are all in a drawdown or in a or have been stopped out. And once we see such a move, we are looking at that 50% from that high to this low. And this is where we'll start to enter. Because we are speculators, we are not going to move the market. We want to see sufficient evidence that there are buyers closing off their positions, there are sellers coming to the market, and then we follow that position to the downside. Okay, so for us to get into a sell position right now, it will probably take a couple of events for us to become bearish. Right now, everything points to us being bullish. So our key focus is to find out in this entire range here. Of course, if you can buy here, that'll be the best. But you will have missed this out. Again, here, you'll still be in a sell position. And if you do a sort of like a range down like this, right? This is roughly the area in which we wanted to sell. Okay. So we wouldn't have been a buyer in these two areas, okay? Because we were still considering whether or not there is a short-term move to the downside. But once the first or the most premium price has been taken out, we can start looking for the best price to buy. So the best price to buy will be here. Okay, right now. This is the best bid that we can take. And this is the most premium pricing I take. So this is the range that we're looking at. So if you are looking to buy, okay, anything in the blue zone, it's expensive. Anything in the gray zone is cheap. So if you want to buy cheap, then you will have to wait. If you want to buy, if you're impatient and you want to get into the market right now, then you will buy, but it will be considered expensive. Okay. For the current price to be considered cheap, right? All you need to do is look at where this current price falls within the gray zone. That would mean that you would have already achieved the target for this month. Okay. And then buying at this price next month would make sense when the pivot have shifted to this high here. Okay. So we shift this up a little bit more. Okay. You can see the 50% here. Right. So if we get up to about 5,885 and the pivot shifts up to this level here, then for September, it's a clear-cut buy on the pivot. Okay, so right now we're still engineering the price to enter. Right now, this is the best price to buy, and this is the worst price to buy. Okay, so let me just remove this, not to be confused of, this is the alternative. In the rare chance that we see a movement like this, we hit a double top, come down, we hit again, and we move to the downside. This is our sell plan, okay? But right now, it's much easier to look at a buy plan. And the buy plan is here, and our target is here. Yeah, of course, we can look at the dailies. Okay. So this is a very good price to enter. Okay, but if you're just purely looking at the daily pivot, okay, you'll notice that this price is way below the S2. So essentially, if tonight's news proved to be, it gives a clear-cut indication that there is a interest rate cuts coming, okay? We can look at this area here, look at R2M4 on Monday, okay? We have tapped into this and we failed to make a higher high, and instead we are hovering around here, probably waiting for the news. Okay. But if we do see something like this and we break above the previous high, okay, we can get ready to buy at this high to move to the upside. Okay. Can we buy here again? The idea is that we should not, because anyone who was interested to buy here, they would have already bought. Once we pass this on Tuesday, this R2 high on Tuesday, if we do tap into this area, the expectation is that this should make a higher high. If this is a true area where buyers are coming in, but it did not make that higher high, okay, we are supposed to get above this area, tap into this area and make a higher high, but there wasn't sufficient buyers to do this move. So if you are a buyer, you will not buy at this area right now, because this basically shows us that there is the buyers here are pretty weak, right? They sat through an entire day with probably just like 13 pips or 1300 pips, right? So what you want to do is you want to wait for this second move, and you need to see that higher high being created. And once that higher high has been created, there's confirmation that there is sufficient buyers here. You will want to take the previous high as your support. Okay. Otherwise, we might see that the news going against the S&P 500, and we move to the downside below S2, right? And then we see, wait for this move up again. Okay. Okay. This low gave us this indication of this gap here. Okay. So this gap hasn't been tapped into. So what we mean by that is that whenever we see price move to the upside, okay, and as it's coming down, right, this was the previous high that we saw, and then we gap up into this area here. There were no sellers here that managed to push or absorb the price, right? Basically, buyers were just hitting the bids, hitting their offers, and push the price up to this high. So the first time around when it comes back down, right, we were expecting this entire area to be filled. It did not get filled. So at some point on a later date, this area will be filled, because any buyers who were bidding in this area here, right, were not able to get their bids filled. So we will probably see some absorption of sell orders if price do get back into this area. Okay. So again, this is a low time frame analysis. This is 15 minutes on the daily pivot. Based on the daily pivot, we are expecting M2 to R2. Okay. But the rationale for this area being a weak area is because it has been tapped, did not make that higher high. So the second time around, we are not going to be absorbing any sell orders in this area. We will not be putting limit orders here. We'll wait for that price to tap into this area. And once it pushes past the previous high, we will then participate when that retracement happens. Otherwise, this is where we want price to retrace, because if you can buy at this price, why would you want to buy at a much higher price, right? Okay, so I'll just leave it here on the slightly higher time frame, 1 hour time frame. Okay, I think we are about 10 minutes over time, but I'll just leave it here just for see if anyone has any questions, right? Otherwise we can take a look at the Fed Watch again, just to see what's that percentage or what's that change since last week. So the next FOMC meeting, where they are going to change the FOMC, it's 28 days, which probably is 18 of September. Okay. Ooh, so it's 67.5%. Okay, so interestingly, you have yesterday, 20th of August, it was at 71%, and now it's at 67.5%. So it has reduced, but where did the percentage go to? Right? People are expecting a 50 basis point cut, right? It increased from 29% to 32.5%. So they're expecting 50 basis point cut instead of a 25 basis point cut. So that will mean that anything against the USD will appreciate more. And in that sense, right, the S&P 500 will achieve, this is the fundamental reason, right? S&P 500 will achieve the target that we have gone through just now. Okay, so this is 18th of September, right? Again, next FOMC minutes will be somewhere in October, and then FOMC rates will be on the 7th of November. But you can see as well that the 50 basis point cut, right, has been reduced. The 75 basis point cut from now, right, till then has been increased by a small amount, 2%. But as compared to, say, 1 month ago in July, okay, a 75 basis point cut increased from 2.4% of the distribution to 42.9%. Okay, so the expectation of interest rate cuts and higher interest rate cuts has been increasing. So that means we will be looking at dollar weakness all the way to the end of the year. All right. Okay, I think that's about it for today. We went through quite a bit. So as always, if you are interested in looking at previous webinars, you can find them at vantagemarkets.com/webinars. And if you have any questions regarding Vantage Markets, you can email them support@vantagemarkets.com. All right, with that, all the best to trading the S&P 500 in the upcoming session. I'll see you guys again tomorrow for the educational series. Till then, all the best and have fun.